Yeah, the coast is still clear. Everything looks good to me. Looks like this market's going to continue to move higher, and we're going to continue to make money. Ignore the doom and gloomers. They've been wrong for years. Instead, you should be looking at this. This has been correct for year after year after year. Okay, let's take a look at the market. All right, we haven't had the greatest market. We had a good week, I should say. But you can see we had the double shuffle where we moved down a couple of weeks ago. Notice the purple predictors, not super great here. But overall, as we go through our various indicators, the unique indicators that you can only get here at TradeSmith, you're going to see, we're going to see more and more positive things, but not greatly positive. In other words, we should see this market continue to move higher. Here's one example of what I'm talking about. Here we've got the DI plus, that's the green line in the upper box in the upper right-hand corner, and it's way above the red line, which is the DI minus, showing that buying pressure is still stronger than selling pressure. And in the final analysis, that's all that matters. That's why we're in a bull market and will remain in a bull market for at least till the end of the year. January, we'll probably see a little bit of a dip, but we've got a good solid 5 or 6 weeks ahead of us. Nasdaq just took off. Boom, there we go. You can see also the purple predictors in great shape. That doesn't mean we won't get a 1 or 2 or 3% retracement here sometime before the end of the year, but nonetheless, all the factors remain bullish. Seasonality, really interesting situation. I say bullish, which remember last week it was neutral, but we broke to a new high. And now we did it by going straight up for like 5 straight days. And it makes me nervous that the market may be overextended. And that's why I put the question mark on there. In other words, we could sell off for a couple of days. But the bottom line is we made higher highs. We didn't make higher lows. I'd like to see that now too. But the higher highs puts me into bullish with a question mark. But that's a big change from the neutral we were in before. IWM just took off. Oh, by the way, the purple predictor's not really confirming the last couple of days. So as I say, it's a bullish factor, but I've got it's a little bit of a weak bullish factor. Nonetheless, my rules tell me that when we have a bullish seasonality in a bull market, I've got to go to double size position. Now, that's what I'm going to do in my account. I can't give you advice because I don't know your personal financial situation, but in my rules for my account, I'm going to double the size of my trades now because with this bullish seasonality, I believe in it so much. Now, seasonality, our long-term seasonality, I won't even bother to break this down. It is fantastic. The yield curve, which predicts the market a year in advance, has worked, of course, superbly well. But notice that, and it really works at extremes, and we're not at an extreme right now, but nonetheless, it looks like the yield curve is going to remain a positive here for the near term into the middle of December. And then you can see next year, it's not that it's bullish or bearish at these intermediate levels, but that it's going to put a cap and not allow the market to rally too strongly next year. Asset allocation continues to stumble at a low level, and this is not good. I like, bull markets require new cash to come into them. And one great place to get the cash is from the bond market. Bond market's not providing its contribution to this bull market. Our RISKDICATOR also shows that people are kind of hunkering down. They're saying, it was up this week, I should say, but in general, you can see that consumer staples have outperformed. So that would be things like consumer staples. Utilities have done pretty well until this week. So my feeling is that we're going to continue to see the RISKDICATOR go higher, but this is still one of the reasons why we're not going to see a super explosive bull market, because investors just aren't feeling that frisky. They're kind of saying, you know what? Yeah, bull market, but I think I'm going to take in this bull market in boring stocks. Now, global shares popped to new highs, but as I've been saying for some time, I like the U.S. market better, so I'm not taking a position over here. Bonds continue to move high. Now, fully paid up members, I got a very, very interesting analysis coming up for the fully paid up members. But based on this chart right here, we're making higher highs, higher lows. Purple predictor is bullish. This would suggest higher bonds and lower interest rates. Now, if that's the case, then we would expect the... Oh, and now, here's something before we get to what we would expect. The green line shows interest rates, and you can see that the green line is starting to come down a little teeny bit. Not a lot, but a little teeny bit. The gold line is the price of gold. It is suggesting lower interest rates. The blue line is the 10-year treasuries, which in Germany, which have been the most dominant factor, they're suggesting lower interest rates. Only the CRB, the chart down at the bottom, is suggesting higher interest rates. But fully paid up members, stick with me. I want to do a significant modification of this. Now, if interest rates are coming down, then the dollar is going to come down. Now, I gotta stop for a second on this chart as well. So I had showed you several weeks ago, which worked great for a few weeks, a gigantic head and shoulders bottom, which, if I remember, would have had an objective up around 97 on the dollar, which would be a huge move. But a week and a half ago, we cracked down below the neckline. That's that horizontal purple line. And right now, we're at the right shoulder. And if you read classical charting, if we break the right shoulders, we should get short. We should get short the dollar. And you can see we're right there. And by the way, I don't have a chart of the euro here, but we've already broken that right shoulder in the euro. So right now, I'm starting to take a very bearish look at the dollar as we break down below that right shoulder. Gold, now, if the dollar's cracking down, then gold should be cracking up. And yet it's creeping up. Now, that's not good. If there's really bullish news and the market's not really reacting bullishly, you got to kind of scratch your head and go like, what's happening here, right? ¿Qué pasa? And right now, that makes me nervous. So I like being long gold, but I don't like being long gold really heavily at this point. But I do believe the fundamental factors are really lining up for a significant bull market to get back up to those highs at 1360. I just don't like the price action. The bullish features are there, like the dollar cracking down hard. Why isn't gold going up? Makes me nervous. Now, let's take a look at our factors here. Up at the top, we see the euro. That's I just mentioned. It's going up. CRB, I counted it as neutral. But you can see down at the bottom, the yen is taking off, and this should be driving the currency should be driving the gold price much higher, much faster, but it's lagging behind what it should be lagging. Once again, if something doesn't rally when there's a bull move, it makes me nervous. And oil, I'm taking a more bullish approach here. OPEC has been able to keep their discipline reasonably well. Global economy is perking up a little bit, so the feeling is demand is perking up. I just don't see it as a major bull market, even though that chart looks like a major bull market going from 42 to 59. But what can I say? All right, fully, all you freebies, you know what to do. I'm not going to give you the big pitch. You know what you're supposed to do. You should immediately go down to the bank and send us 4,700 pennies every month. That would be fine with us. We will take pennies. It's less than a Starbucks coffee a day. I'm sitting here with my venti iced latte, and guess what? That cost more than our TradeSmith. All right, fully paid up members, hang in there just 1 second. Got much more nuances and some big shocking changes in some of the indicators.